Welcome back to Deep Dive. We're here to unpack complex stuff and pull out those key insights just for you. Today, we are diving deep into the world of semiconductors, specifically Taiwan Semiconductor Manufacturing Company. TSMC. We've got some really interesting material here, mainly excerpts from their very recent Q2 2025 earnings report, plus what the analysts are saying. Our goal, figure out why TSMC just broke records, what's behind this incredible growth, and really, what does it mean for technology's future? You might think earnings calls are dry, but honestly, this one feels kind of electric.
Absolutely. What's fascinating here is how clearly these numbers tell a story. It's innovation meeting just massive demand. It's not just about the profit figures themselves, but the strategic choices underneath that are really pushing things forward.
Okay, let's unpack this then. TSMC delivered a blockbuster Q2 2025. We're talking a record-breaking 52% jump in profit and revenue. $30.07 billion.
Which beat analyst estimates, not by a huge amount, maybe $0.14 billion, but still beat them.
Right, and the earnings per share, the EPS, hit $2.47.
Yeah, beating estimates there too by $0.11. And get this, net income hit a new all-time high for the 6th quarter in a row. 6.
Wow, 6th consecutive quarter.
And looking ahead, they didn't just stop at Q2, they actually boosted their full-year revenue growth outlook. They're now saying 30% year over year.
Up from what, mid-20s?
Exactly, up from the mid-20s% range they guided before. So that's a big jump in confidence.
So the big question then is how? How did they manage this, especially exceeding expectations like that?
Well, it raises that exact point, right? How'd they pull it off?
And this is where it gets really interesting. The growth engine. This surge isn't, random. It seems fueled by just relentless demand for advanced chips.
Yeah.
Especially for AI. We're seeing their advanced nodes, think 3 nanometer, 5 nanometer, 7 nanometers. They're now the core drivers. And high-performance computing, HPC, that's grabbing 52% of their total revenue now.
And that HPC bucket, that's largely AI chips, data center processors, the really cutting-edge stuff. So if you connect the dots, TSMC isn't just sort of passively reacting to this AI demand. They're actively shaping their production capacity to meet it, which is smart.
How are they doing that exactly? Because you hear about capacity constraints everywhere.
Right. They are facing constraints, but their big strategic move isn't necessarily just building brand new giant factories from scratch, what they call greenfield builds. Instead, what they're doing very cleverly is converting existing N5 tools, the machines, for 5 nanometer to make N3 or 3 nanometer chips.
Okay. So upgrading existing lines.
Precisely. It maximizes their output on the hottest nodes without the massive cost and time of a completely new fab. It's a really efficient play.
That does sound smart. And despite pressures, like you mentioned, cost pressures, things like foreign exchange headwinds, maybe costs at overseas fabs.
Yeah, building overseas is definitely more expensive.
Right. But even with that, their gross margin held up pretty well, didn't it?
Yeah, it did. 53.2%, which is quite strong given those headwinds.
And they're pouring money back into the future tech, too. Something like 70 to 80% of their capital spending
is laser focused on advanced processes. Yeah, that keeps them right at the leading edge.
So they're not skimping on R&D or future capacity?
Absolutely not. That commitment is critical because we're seeing AI chips demanding bigger physical sizes, the die sizes.
Oh, interesting. Bigger, not just smaller and faster.
Both, actually. The complexity means bigger dies. We're talking maybe a 5 to 10% increase expected in die size for some of these advanced AI chips. So TSMC has to innovate there, too. They're working on new packaging solutions, things like fan-out panel-level packaging, basically ways to connect these bigger, more powerful chips together effectively.
Preparing for even bigger AI chips down the road.
Exactly. They're getting ready for the next wave.
Okay, so what does this mean for the next year or two? What's on the horizon?
Well, the big one is N2, their 2 nanometer technology.
Right, 2 nanometer. That's the next big leap.
And it's on track for volume production in 2025. What's really telling, though, is they're apparently seeing even more tape-outs for N2 than they did for N3 or N5 at a similar stage.
Tape-outs meaning designs being finalized by customers.
Correct. So lots of customers are already designing chips for their 2 nanometer process. That signals really strong interest even before it's fully ramped up.
And the market sees this. What are the analysts saying now after these results?
Oh, yeah, the market definitely sees it. The analyst consensus is still a strong buy. The average rating is around 1.35, which is very bullish. And price targets are reflecting that optimism. They range pretty widely, from maybe $155 up to $270 per share.
Wow, big range.
It is.
Yeah.
But you saw big names like Goldman Sachs, Needham, They both raised their price targets right after the earnings call.
So real conviction there about TSMC's dominance and continued growth.
Definitely. The conviction seems pretty high right now.
Okay, but every deep dive needs the flip side, right? We have to look at potential risks. They can't all be smooth sailing.
No, absolutely not. While the picture is overwhelmingly positive, there are things to watch.
Like what? You mentioned FX earlier.
Yeah, currency swings, the whole FX situation, that could potentially shave, maybe 5% off revenues or squeeze margins a bit. Plus, there are always tariff risks lurking in the background with global manufacturing.
Okay, so macro factors. What about the stock itself?
Well, the stock is trading near its all-time highs. And if you look at technical indicators like the relative strength index, the RSI, it's signaling that the stock is potentially in overbought territory. That doesn't mean it can't go higher, but it's something investors watch. It suggests maybe a pause or pullback could happen.
Right. Important context to have. It's had a huge run.
It really has.
So let's try and bring this all together. What's the main takeaway here from this Q2 beat? It feels like it's not just that TSMC is benefiting from the AI boom.
No, it's more than that.
It's like you said earlier, they're not just riding the wave, they're kind of building the surfboard, making the wave possible.
That's a good way to put it. They're building the surfboard, maybe even designing the wetsuit too. Their execution has been incredibly strong. Combine that with the surging demand and their relentless pace of innovation. It really does keep them right at the absolute center of global chip making. They're driving things.
A critical position in the tech world.
Absolutely fundamental. So as we wrap up today's deep dive, maybe here's something for you, the listener, to think about. Given this aggressive push by TSMC into 2 nanometer and these new advanced packaging techniques we talked about, what entirely new classes of devices or maybe computing capabilities do you think might become possible in the next few years? Things that maybe aren't even really on our radar yet, all thanks to these kinds of semiconductor advancements. Something to chew on.